That's something that a lot of people are very nervous about. I'm kind of on the opposing side in that, and maybe this is again being contrarian, but I actually think that this is going to be, whenever we get this, it's going to create a panic sell-off. And then I think it's going to be the start of the bottom and the next bull run. And the reason I say that is because we're in a market where it's not just the market where you close your eyes, you throw a dart at any sort of crypto or stock, and you just make endless amounts of money. This is a market where true traders come out as pros, and then everyone else kind of unfortunately falls by the wayside. So the way I do these courses, it's basically compiling all the knowledge and the trials and tribulations of what I learned over 20 years of trading, right? So in the beginning, I took hard lessons. It cost me money. Luckily, I didn't have a lot of money early in my trading career, or I would have lost that as well. But it was really learning the hard way by studying, trial and error, and figuring out the different methods that you need to put together. So for instance, along the way, I forced myself to develop this strict discipline, right? Because if you're not disciplined, this market will eat you alive. Doesn't matter if it's crypto, commodities, currencies, or stocks. There are sharks in those waters, run by institutions, run by algorithms. All of that stuff is made to kind of make you do the wrong thing at the wrong time. So I spent a lot of time in this course going over, how do I get disciplined? What do I do? How do I recommend people become disciplined? Because if you can become disciplined, then all of a sudden you stop making the kind of the errors that the common investor makes. Another part was the emotional control, which ties into discipline. How do you get a handle on that emotion when you see people pumping, like the influencers on Twitter saying Bitcoin's going to 100,000 next month or 500,000? How do you keep yourself grounded? And in fact, we even go into how do you use that as a contrarian indicator and a signal to actually do the opposite of what you're seeing in the Twitter sphere or the social media area. And so those kind of pieces were the hardest for me to learn. And I think for a lot of investors, that will be the biggest kind of uphill battle. But when you achieve it, you achieve this kind of inner peace and knowing that you're now financially stable. And you'll notice I haven't even talked about charts at this point because the emotion and discipline are just so important. But going into the charts now, I definitely go over all my strategies, like everything I've accumulated for 20 years, my setups, like what setups do I find to be most successful that have a high win rate, high probability of success. And then ultimately the last course kind of delves into all my secrets. So in 20 years, you can imagine I've come up with a lot of different techniques that aren't taught in books that I've found as I've been studying that work, like the confirmation signal, the three-tail theory, time counts, different cycle work. And that's all revealed there. So I really poured my heart and soul into it to give people a fighting chance to make money, not just in bull markets, but in bear markets and in choppy markets like we're seeing here. I was the one kind of figuring it out. I think if I had someone to follow that kind of had done a lot of the legwork already, it would have come a lot faster. But I think the key about this is that, one of the things with contrarian thinking is that you want to start questioning everything. When everyone's saying something, you need to be able to separate yourself and say, wait a minute, I'm noticing that everyone's saying this and it's very likely a top in Bitcoin or a top in this stock, and start thinking that contrarian way. But also take it slow. So one of the things we talk about in the courses is about how you have to manage your position size, how you have to kind of think about jumping into a position with a small testing position, kind of like dipping your toe in the water. And that enables you to kind of prove to yourself that it actually works. And I'm a big player on that in terms of, everyone taking these courses. I hope you just don't say, oh, Gareth said so I'm going to just do it. Take it with a grain of salt and prove it to yourself as well, because that will be a confidence builder when you do it over and over again with small shares or small coin amounts. And then you can kind of say, okay, 8 out of every 10 times this works. That I've done that 100 times. Now I feel confident to up my amount of money invested, and that will just kind of build on your confidence. So it's really a labor of love and a little bit of time, but that time pays off in spades with so much financial freedom. And I think that's the biggest thing in this day and age is like, I really feel like I already have my retirement plan, meaning that as long as this finger works, which is my mouse finger, When I'm 85 years old, if I need to make money, let's say I want to go on a cruise when I'm 85, right? I can just go to the market and be like, okay, well, I'm going to use my knowledge to just make $1,000 today or 5,000. And that's what it gives you, this financial freedom. So there absolutely is. So we talked about it just prior, but the Dixie, the DXY chart, I think that's a really interesting chart. Everyone's so kind of focused. It had this beautiful double top right here. And a lot of people think it's going to just rip higher. I'm not a believer in that. I actually think we're going to start to see a pullback and a move lower in the dollar. And if we go to a larger time frame, if I zoom out, you can see two trend lines, right? So this trend line, it kisses right here. It kind of gets close here, but then it tags and pierces here. And then look at that one, how it intersects there. And then this little pivot low going back to 2001. I think that's the most amazing thing. And by the way, in the courses, I teach about drawing proper trend lines, right? How do you know this is the right trend line to draw? And we go over that. But finding a pivot point here, going back to 2000 or 2001, I mean, that is so powerful to find that level and understand you should have resistance here. So I'm in the camp that I think the dollar is actually going to start to weaken in the second half or in the last couple quarters of the year into 2023. And I think that's going to coincide with this kind of counter thought process where the Fed is actually going to have to pull back on their rate hikes. And actually, as we see the economy unfortunately slipping more into recession, they're going to basically have to stop. And this is going to be a tricky thing for the economy to get through, but I think it's going to be a creator of a weaker dollar. I think basically you have Bitcoin correlation to the dollar, and then you have a lot of the other cryptos that trade off of Bitcoin and by default the dollar as well, right? So we see generally whichever direction Bitcoin's going, the rest of the crypto market is going to kind of go in that direction to some extent, maybe a little bit of a percentage difference. But yeah, I mean, it wouldn't shock me if we see a short-term relief rally in Bitcoin, maybe back towards that 25,000 level. I am kind of midterm still, unfortunately, a little bearish, mainly because I do worry that the economy weakening, think about this, the last 20 years, the Fed has, every time we've slipped into a recession, the Fed lowers interest rates and prints money and prints a ton of money. Well, inflation doesn't enable them to do that as much. And I don't think the markets fully gather that yet. And so I do worry that if we do slip into a recession, what's the card the Fed plays here? They can't just print us out of it because inflation is going to remain relatively elevated. Now, inflation is coming down, but it's not going back to 2%, which is going to make it hard for them to kind of stimulate. So I worry that we'll have an asset sell-off either later this year or in 2023. And just by default, we know that a risk asset selling off like stocks will trigger a Bitcoin kind of flush out. Now, I do think that's the final flush out where we look to start to accumulate on a longer term for Bitcoin. The kind of the dream that a lot of crypto Bitcoin players have, and not everyone, but a lot of them, is that Bitcoin will become the digital gold. And what that means is that as we see inflation kind of rear its ugly head, it becomes a safe haven versus something that sells off when the panic hits. And so you kind of want to see that maturity start to take hold in Bitcoin over the next 5-10 years and become that place where people can go for safety versus right now what it is it's a very risky asset to invest in. So remember that Bitcoin is traded in terms of dollars and gold is traded in terms of dollars. So generally when the dollar goes up, those assets have to decline to keep their value, to keep their standard value. And that's why we see, for instance, when the dollar's higher, Bitcoin sells off, gold sells off. And then when the dollar falls, Bitcoin oftentimes gets a bid and gold will get a bid and metals will get a bid in general. So there's this kind of inverse relationship because commodities, and in all fairness, we're hearing from the SEC that Bitcoin is kind of now a commodity. It's traded in terms of dollars. So I think number one, there's going to be regulation, right? And I think there's going to, when something's labeled as security, there's going to be strict regulation about how it has to be managed, how it has to run. And so I think that that's something that a lot of people are very nervous about. I'm kind of on the opposing side in that, and maybe this is again being contrarian, but I actually think that this is going to be, whenever we get this, it's going to create a panic sell-off. And then I think it's going to be the start of the bottom and the next bull run. And the reason I say that is because if there's one thing I've learned in the stock market of trading for 20 years is that what the market craves most is truth and knowing what's going on and knowing facts. It hates this kind of unknown of like, how is it going to be? Is it going to be this? Is it going to be that? And think about it like this. There's a lot of institutions that want to invest in crypto, but there's too many unknowns. They can't. They don't know the rules. They don't know the regulations. And so they're just sitting on the sidelines. So if you get clarity, then I actually think that could be good. Now, granted, initially, you might see changes in how Ethereum is managed and how some other things are done. But ultimately, when the dust settles, I really think it's going to be a positive, and it's going to open the door to so much potential investment. And that's kind of what, I mean, in my dream scenario, if I could draw it up on a board, I'd say, okay, have this stuff come out. Everything kind of takes a dump. Maybe we see that 12, 13,000 on Bitcoin, maybe 600s on Ethereum. And then I just start accumulating. Now, in the series, in the Winning Trader series, one of the things we talked about earlier too, don't just be like, oh, we're seeing the dump, so I'm going to throw all my money in right here, right now. Dollar cost average. Set yourself up. What I talk about a lot in the course is thinking about how much you want to invest ahead of time. So you don't just want to do it on the fly because emotion comes in and you're like, oh, you get greedy and you're like, I'm going to make so much money. So you throw all your money in the trade. And what happens when it goes against you? What if Ethereum goes to 300? Well, you do all your money, you're down 50+% at that point. That's a lot to handle. The emotions are going to bubble up, which is the emotional control aspect. And you might do something that you shouldn't do. Right. So what you want to do, think about the amount you want to invest initially, and then start picking target points. Like if for me, let's say 650, I'm going to divide all my money into 6 parts. At 650 on Ethereum, I buy 1/6, 550, 1/6, 450, 1/6, basically standardize it out ahead of time. So you're just like a robot. Think about an algorithm. Algorithms are just, they know what they're going to do at every point. You need to become that. You don't want to be an emotional investor. You need to be kind of a robot. When you become that kind of pro or master level trader, you sit down in your computer chair in front of your screens, in front of your charts, in front of your stocks or cryptos, and you're at peace with not doing anything. And that's an important thing to get to, right? That's an important point to get to, is that you are willing to say, I might be sitting down here and I might not do anything. And at that point, you are now at a master level or a pro level because you're not going to force anything. And you know that the market inevitably will give you trades. I've never been like, oh, that was the last trade in the world and there was never another trade. I mean, you're never going to get to that point, but you have to be okay with the discipline of sitting on your hands and letting the charts speak to you and giving you the high percentage setup. If you force it, the market eats you alive.